This is Matthew Cratter from Trade University, and today I want to answer the question, what is Bitcoin's ultimate price target? Now, price and technical analysis are not two things that I talk about very much on this channel. I instead prefer to focus on Bitcoin's mechanics, how it competes with other cryptocurrencies in the market. But today I want to do what really is more fundamental analysis than technical analysis, but I do want to talk about Bitcoin's ultimate price target. So we're first going to come up with a conservative estimate, and I'm going to be using the hypothesis, which you may or may not agree with depending how far down the rabbit hole you are. But my hypothesis, and many people's hypothesis, is that Bitcoin is a great store of value. Now, this doesn't mean that it doesn't fluctuate in price. Gold is a great store of value, at least it has been until the last 10 years or so. Gold does fluctuate in price. In 2008, for example, it went down 50%. What it means, what being a store of value means, is that it is possibly a good way of sending value from your present self to your future self. This is what store of value means. When I was a kid, and I've used this example many times, a Big Mac cost about 50 cents, maybe 40, 50, 60 cents, somewhere around there. If I'd taken some US dollars and stored them under my mattress from then until now, I would not be able to buy a Big Mac with that money today. So in this sense, fiat US dollars are not a good store of value. If I'd stored that 50 cents in gold or silver under my mattress, I would still be able to buy a Big Mac with it. So that's how store value works. Don't confuse it with short-term price fluctuations or even multi-year price fluctuations. Store value is something that you measure more over decades than over months or years. Now, this doesn't mean that the value of gold didn't fluctuate over the past 50 years. As we said before, in fact, gold's price has been quite volatile at times. It was very volatile in the 70s and early 80s. It was volatile in somewhere from 2008 to 2012, where it crashed, and then it went up a lot and hit new highs. But the hypothesis I have here is that Bitcoin is like physical gold in terms of being a store of value, but theoretically much better, because Bitcoin is easier to send around the world. It's easier to store. It's easier to hide. You can even use a brain wallet for Bitcoin, where you use a hardware wallet and you generate 12 recovery words, your recovery phrase or your backup phrase. You memorize these 12 words and you can go anywhere in the world and take your Bitcoin with you. You don't even need to have that hardware wallet with you. Try taking $1 million worth of gold across a border or on a plane, etc. It's just very, very difficult to do, much less $1 billion worth of gold. Also, Bitcoin is easier to verify that it's real. You can do this cryptographically, and it's easier to assay, unlike gold, which can be very expensive and very difficult. If you have a gold bar, you can scratch the surface. Maybe the surface is gold, but you don't really know if there's tungsten or something else in the middle of it. And it's very bulky. And how do you verify $1 million worth of gold or $1 billion worth of gold? This can become very expensive. With Bitcoin, it's very easy to do. Now, also, Bitcoin has a fixed supply, while gold supply keeps increasing by 1 or 2% a year. That's basically the monetary inflation rate of Bitcoin at the moment. After the halve, it's about 2% now, I believe. After the halving, it'll be closer to 1%. But we do know that ultimately Bitcoin has a maximum fixed supply of 21 million coins. It's probably a lot less than that, fewer than that, because we know that a lot have been lost. But gold supply will keep increasing. There's a lot of gold under the ocean. There's a lot of gold in outer space, for example, the asteroid belt and different planets. So gold supply could theoretically increase a lot more. We could find a huge load of gold somewhere in the world, whereas Bitcoin, we know this isn't true. Also, gold has both industrial and monetary uses, whereas Bitcoin is a pure monetary asset. And so it's not subject to these price distortions, these commodity demand distortions like gold or silver, where if they're going up, you don't know if it's because people are making more iPhones and there's physical demand for the commodity, or maybe there's demand for gold or silver or another precious metal for its monetary value. So in all of these ways, Bitcoin is superior to gold, but my hypothesis is that Bitcoin is a good store of value like gold. Now, the current market cap of gold, at least according to this website, is about 13 trillion, 12.8 trillion. The estimates I see are always somewhere between 10 and 13 trillion. So let's make some really conservative assumptions. Let's assume that gold's market cap now is only 10 trillion. Let's assume that there are still 21 million Bitcoin left, although the reality, as I said, is that probably 3 to 4 million have been lost forever. If Bitcoin replaces gold as a store of value, completely replaces it, it should easily be worth 10 trillion, which is the current market cap of gold, a very conservative. It's probably closer to 13 trillion, but let's use $10 trillion. Let's divide it by the number of Bitcoin that will be in existence at some point and assume that they're all accessible. 10 trillion divided by 21 million, you get $476,190 per Bitcoin. I think this is a conservative price target for the next 5, 10 years, maybe even sooner than that. Bitcoin's properties make it probably at least twice as good as gold. Maybe it's 10 times as good as gold because you can send $1 billion for just a couple bucks all around the globe without anyone stopping you. Try doing that with gold. Try putting it on a boat or an airplane and having to buy insurance for it and also to protect it, etc. So Bitcoin's properties make it at least as good as gold. So that gets us to double this amount, and that is $952,380 per Bitcoin. And it makes sense that in the digital age, we would have a digital store of value rather than continuing to use shiny yellow rocks that have all the problems that we've talked about. If Bitcoin weren't around, I would be a gold bug. Gold is the best thing we have as a store of value up until Bitcoin. But now Bitcoin is far, far superior in the same way that a lot of the digital world is superior. For example, digital books are much easier and cheaper to produce and distribute, etc., than physical books. So it makes sense that in the digital age, we would have a digital store of value rather than shiny yellow rocks that need to be moved around on planes or boats or armored cars. So we've basically reached $1 million per Bitcoin price target. We call it 952,000, rounding error. And that is my conservative estimate for where Bitcoin gets if it basically just replaces gold as a store of value in the coming years or decades. If you're enjoying this video so far, I just ask you to please hit that subscribe and like buttons. That's really the best way you can support the channel if you're enjoying this video. Now let's think about all asset classes that function as stores of value, and we're going to add them all up. Real estate, for example, many people in the world live in an apartment or a house, and so in this sense, a lot of the real estate has utility value or utility function, but real estate is also used as a store of value. So many wealthy people have multiple homes as a place to park their cash. They don't want to leave it in cash in the bank, or it's going to depreciate as the Fed or other central bank prints more of it. So a lot of wealthy people have multiple homes that they use as stores of value. Wealthy people also buy commercial real estate, ranches, land, etc., to store their wealth. So real estate has this sort of dual function of being a store of value and also a useful asset. Now the total global value of all real estate in the world as of 2020, and of course it went up after that, it went down after that. So we're just going to use this as an approximation, 326.5 trillion. Now let's talk about some other stores of value. We have stocks, obviously, which are in part used as a store of value. The latest number I can find here is 105 trillion for all the stocks listed on stock exchanges worldwide. This was as of June 2022. So we'll be making some adjustments to this as well, because obviously the stocks have fallen. Most stocks worldwide have fallen since June of last year, but call that 105 trillion. And then for bonds, we're going to use this estimate. In 2021, the global fixed income market, all the bonds, if you added them up, government bonds and corporate bonds, etc., was approximately 127 trillion. And again, we're going to adjust that downwards as well because interest rates have gone up, which means bond values have gone down. So global real estate, 325 trillion, global bonds, 115 trillion, global stocks, 100 trillion. And again, that's only publicly traded companies, not private companies. And then gold will use our previous conservative estimate of 10 trillion. I'm not even going to add collectibles. You could probably get another $1 trillion though if you count all the art in the world and the wine and stamps and jewelry, antique cars. You could probably get a couple $1 trillion. So if we add these up, we get a rough estimate of 550 trillion for these different asset classes. Then the question becomes, what percentage of this is a store of wealth or store of value versus a necessity, for example, like living in a house versus having a second house that you use to store your savings. So let's say that be really conservative and say only 25% of this number is actual store of value purposes. I think it's much higher than that. For example, bonds are really 100% a store of value. It's the way that countries store trade surpluses with each other. It's the way a lot of retirees store their money. They buy T-bills or something like this. But let's be very conservative and say that 25% of 550 trillion is store of value. So again, we're not using the whole real estate number as well. We're using just a fraction of it. So we're assuming 3/4 of it is really has utility value and people live in it, etc. Obviously, people don't live in a lot of commercial real estate, but let's make a really conservative number and call it 25%. So that's 138 trillion worth of store of value assets that are currently in the world. These are places that people use to store their money and try to communicate value to themselves, transfer value to their future selves. Now, Bitcoin is better than all of these. Bonds rarely provide returns above inflation. We see how badly they performed over the last year. Real estate comes with negative carrying costs like property taxes and maintenance costs. So in order to emerge on the other end with value transfer to yourself, you have all these intermediate costs and expenses that you have to take care of. Gold is difficult to store and move around for large values. As we said, you can store a couple $100s in your pocket in gold coins or a couple $1,000, but really you can't move around really large amounts, especially across borders, for example. By contrast with Bitcoin, you can easily store $1 billion in your head. It cannot be seized. It cannot be debased. They're making more real estate and gold all the time, but as we said, we know the fixed maximum supply of Bitcoin, for example. For these reasons, Bitcoin should be able to steal most of that market share of 138 trillion. This is the hypothesis over the coming decades. 138 trillion divided by 21 million coins gets you to $6.5 million per Bitcoin. If we use a more realistic supply of 17 million Bitcoin, assuming that 4 million have been lost or are no longer accessible, including, for example, Satoshi's coins, which probably will never be moved. If we take 128 trillion divided by 17 million Bitcoin, we end up with just over $8 million per Bitcoin. Now, it's important to note that all these numbers are being quoted using the purchasing power of today's US dollars. In other words, one Bitcoin in 10 to 30 years from now should be able to buy you about $8 million worth of stuff in today's dollars. So if your future self owns one Bitcoin, you'll be able to buy essentially $8 million worth of goods and services. That's the adoption piece of Bitcoin. However, you have the monetary debasement piece. The US dollar will continue to lose purchasing power, so the nominal value of that $8 million of purchasing power of Bitcoin, that nominal value will probably be much higher in a decade or 2 decades or 3 decades from now, probably closer to something like $100 million per coin. So when the US dollar is close to death, whenever that is, and in 15 years from now or 50 years from now or 100 years from now, the value of one Bitcoin in US dollars will obviously approach infinity in a similar way that you have Zimbabwe dollars getting into the billions and trillions. So how do we get to these numbers? You get to $8 million per Bitcoin just from global adoption, for more people using Bitcoin as a store of value. And then you get to something like 100 million and beyond per Bitcoin from US dollar debasement. And so you'll have $100 million in your one Bitcoin in terms of that day's purchasing power. But of course, everything will be more expensive then. So it would be like having $8 million in your pocket today. But I think these are actually realistic numbers. I don't know if we get there in 5 years or 50 years or 150 years, but I suspect it would be somewhere between 10 and 20 and 30 years that we get to these sort of numbers for Bitcoin. And I think this is the important context to keep in mind when we see Bitcoin trading in the 20,000s and people are worried, is it going to go to 15,000 or 12,000? You have to keep your eye on the big picture. First of all, I don't think it does get that low. I think the bottom is probably in, though of course no one knows. But I think you have to look at the risk reward. Obviously, Bitcoin, the worst that happens is it could go to zero. I don't think that's going to happen. And the best that happens is it goes to 8 million or 100 million or something like this. So you can see the downside versus the upside. And this still makes it a very, very good and asymmetric investment, which is what good traders and good investors are always looking for. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.